Did the 2023 tax brackets just get lower? Well, technically no, but technically yes. Let's talk about it coming up next. Hey, this is Mel Stubbs. I'm a financial planner here at Christy Capital Management, and we're trying to bring you good information as it deals with your retirement. Did the 2023 tax brackets just get lowered? Well, CBS and Money Watch just put out an article going over the details of what the IRS has done. And the IRS is making some adjustments to its rules to account for the impact of inflation. The inflation for 2022 is a lot higher than normal, and so what they're trying to avoid is what's called bracket creep caused by inflation. This is where inflation causes you to move up the tax brackets so that the higher provision threshold could provide relief. For example, they quoted a married couple earning $200,000 a year in both 2022 and in 2023, and determined that the couple would save about $900 in taxes next year just because their income would be taxed at the lower rate. So let's remember how the tax brackets work. You may say that you're in the 22% bracket, but that does not mean that your entire income is taxed at 22%. Some of your money's taxed at 10%. Some of your money's taxed at 12%. So when they increase the top of the limits of each bracket, it causes more of your income to be taxed at the lower rates. So let's look here at this married filing joint tax bracket for 2022 and 2023. Now the percentage tax brackets have remained the same, but what has changed is the top end dollar amounts. In 2022, the top of the 10% bracket and the start of the 12% bracket was $20,550. Well, now it's going to be $22,000 even. If we jump up to the 24% bracket, it's going from $178,150 up to $190,750. It's going to take an extra $12,600 before you hit the next bracket. This cumulative effect of having more of your income taxed at the lower rate, it ends up lowering your overall tax bill. And so they've also raised the estate tax limit as well. In 2022, the first $12 million or so of money was exempt from taxation. Now it's going to be the first $12.92 million. All of these changes act like they've lowered the tax brackets. So did they lower the tax brackets? Well, no, not really. You still have the same 10%, 12%, 22, 24, and so on. But the thresholds of where the brackets change to the next brackets, they did change. And that will make taxpayers better off. What this gives you is an opportunity to do some tax planning. Let's say that you've watched some of our videos and that you're on board with us, and that in some cases, dare I tempt the compliance department and say in most cases, it's good to do some Roth conversions. Now notice I said most, not all circumstances, and I said some Roth conversions, not Roth convert everything. So a Roth conversion is where you take a portion of traditional money and you move it to Roth in order to pay the taxes today on that portion, as opposed to paying the taxes later. What these new thresholds in the tax bracket give you is an opportunity to shift more money at the lower tax bracket. In one of our other videos, we talked about when is the right time to do a Roth conversion. We talked about the beginning of the year, the end of the year, when the stock market goes down. Well, one of the times we didn't talk about is if the tax rates go down. And so even though tax brackets didn't go down, the changes in the thresholds act like taxes went down. You have more room to stay in your bracket, but you still get to Roth convert. Even more money, but stay in your bracket. If you're not exactly sure what I'm talking about here, and you want to talk to somebody about the importance of tax planning, reach out to us at Christy Capital Management. Go to our website, christycapital.com. Go to the resources page. You'll see some videos and articles where you can get some more information. Reach out to me by calling the number on your screen. I'd love to talk with you. If you have more than $400,000 in your TSP and you want help managing it, reach out to us. Tax planning is an important part of financial planning, and for a lot of cases, the TSP does not let you do the heavy lifting of tax planning. So, do you need to do some tax planning? Would it be advantageous for you to do some? Well, if you just think about it, let's say you have a $500,000 TSP balance today. A lot of the clients we're working with, between the pension and the supplement and the Social Security, they really aren't spending a whole bunch of their TSP money to live on. So it's growing over time. Do you want to pay taxes on the $500,000 balance over the next several years? Or do you want to wait 20 years when you're forced to take RMDs out of your account and pay taxes on your 1.5 million account then, let's say? For a lot of people, depending on the exact tax bracket you're in, it makes sense to pay the taxes on the seed instead of the harvest. So for a lot of people, if you're in the 22% bracket or even the 24% bracket, most people want to pay the tax now and shift it to Roth in those accounts before they get too large and the taxes go up. If this is something that you want to talk about and you've got $400,000 or more in your TSP, please reach out to us. This type of planning is what we do day in and day out to help our clients be prepared for retirement. Let's do all we can to make your retirement as good as it can be. Hopefully you got some value out of this video. Let's take advantage of the better tax situation for 2023. My name is Mel Stubbs. Happy planning. We need to do the proper disclaimers. The purpose of this video is not to give specific tax advice or investment advice. We're going over general principles and ideas that can be used, and if used correctly can save and avoid taxes. You're going to want to work with someone personally who knows your situation personally. So seek out advice from an independent financial advisor. This is for educational purposes only. I hope you enjoyed the video.